But let me cross over to Mr. Ali and say that Professor Ati and Mr. Rida have spoken extensively, if I could call it, on the demand side. And someone watching would be curious to understand, what about the supply side? There are many companies in this country which are in the fintech space, which are putting out payment solutions. If you're developing a policy, what are some of the issues you think the government should prioritize in terms of benefiting those now on the supply side, if I could call it?
Well, I think, Julian, look, if the government is supposed to, take a fresh view, and I think there is no need actually for a fresh view, because already as part of the vision and the strategy paper that has been put out, already cash has been highlighted as a main issue. I am quite complimentary of the efforts that CBK did when at the advent of COVID, when the below 1,000 transactions, the charges were waived, EFT, the charges were reduced or waived, and I think those are all the right things to do, in addition to the fact that the limits were increased for the transactions, which is per transaction or per day or per month. So I think those are all very good aspects of it. But now let's step back and look at the bigger picture. 90% of all transactions that are taking place, or commerce that's taking place, is cash, right? When we look at the growth rates we were seeing prior to COVID, it was sitting at about 5 to 7% GDP growth rate. Now, come fast forward to 2020 and we're hitting 0.3%, right? And the cost of cash, instead of going down, it's going up. So it's between 1.5% to 2.5%. So what does this mean? This means that instead of focusing on the 10% or 15% that is already on digital rails and digital commerce, we need to collectively go after the real opportunity, which is talk about setting up the infrastructure, the know-how and the knowledge expanse amongst the rural and the urban populations, how to get the SMEs to come up the curve, and fintechs are the perfect player to partner with, because and at Mastercard we really support through our labs and through other platforms that we offer to fintechs, through our Engage platform, Start Path platform, whereby fintechs can come up with ideas. We proof those ideas for them, we train them, we get experts to work with them, we even inject capital into those ideas, so that then those ideas can go out there and help solve real problems. So I think all of us, we should look at the issues with a fintech mindset. I think we don't have any castles to protect here. 90% opportunity is still out there, and we must collaborate together. And I stress on the word collaborate together with an open mindset, and go after the real problem instead of trying to take the small pie or share of the pie from each other. It's not worth our time. The real focus is to go for inclusion. It is to go after the cash economy. It is to lighten the burden on the government so that they can spend that money somewhere else. It is to bring efficiencies into the SME space and into the fintech space as well. Thank you.
Thank you so much, Mr. Ali. And Dr. Habil, just to pick from what Mr. Ali has said, the necessity of collaboration. For a long time, a number of us thought that banks were in direct competition with the fintech players. But clearly, I mean, the last 5 years or so have shown us that it is more a collaborative effort. What are some of the expectations you have in terms of the outlook from this space, especially given the sort of products we see being spawned out by the fintech companies?
Yeah, you are right in the sense that initially I think a number of players thought that with the fintechs coming into the marketplace, they were more of competitors than entities that you could collaborate with, and I think that is slowly changing. And you can see, for example, in the banking sector, quite a number of them are collaborating with the fintechs, and therefore coming up with solutions that otherwise would not have been possible without that level of collaboration. They are effectively leveraging on each other's strength. Banks have got, in terms of having financial services, being able to provide financial services, but the fintechs have got access to the consumer and providing or meeting the need of the consumer. So by the two leveraging on each other, I think they are able to meet the needs of the consumer in a much more effective way than otherwise would have been would have been the case. And what I'm seeing is that going forward, I think we're going to see more of this. Banks will either create fintechs within their own system, or effectively make some combination with existing fintechs where they can leverage on each other, and as I mentioned earlier, achieve the desired objective. So we are going to see more and more of these combinations, more of these collaborations, effectively trying to leverage on each other to be able to achieve the desired objective.
Thank you so much, Dr. Habil Olaka. There's a lot of concern coming around, and really we must talk about the security. Talk to a number of MSMEs that will tell you that we would like to go and adopt digital payments, but we are worried about security, cyber attacks and what have you. And indeed, if you look at the latest statistics from the Communications Authority of Kenya, did indicate that with the rise and deepening penetration of digital payments in light of COVID-19, cyber attacks are also on the rise. Let me just start with the MSME Authority. Is this a concern you're getting from SMEs, and if anything, how are you helping them?
Thank you very much. It is indeed a concern that we are facing because security of transactions, security of information is a key concern, not just to the MSC, but even to government itself. And I think we've seen a lot of attempts to try maybe and legislate various parameters on security, especially for the fintechs. But the bigger picture is that what we are doing is a lot of investment in capacity building. Maybe I should mention that what is going on across the country now is a massive capacity building initiative between the MSAE Authority with the various financial institutions, Equity Bank, Stanbic Foundation, Family Bank and the like, just to push for adoption of technology and especially digital payments in transactions by our members. And the second very important thing that's happening is that virtually all the industrial development centers that the government is developing in the constituencies now are running so much on technology. And all the payments for the services that will be provided in the Biashara centers are actually all of them automated. And the final thing happening now is that, again, working with various partners, especially the UNDP and the International Labour Organization, is the development of a very modern e-marketing portal to ensure that we propel the products for the MSMEs. And that is why I'm saying that we must demystify technology. Simplicity shouldn't be the one, because there's a socio-cultural aspect to resistance to technology, to the fear that we have, the aversion towards the adoption of technology. So we are trying to invest a lot in capacity building. We are enlisting the services of the member associations across the country in this learning, and we think that we should reach where we want. Thank you.
Thank you, Mr. Ridha. Professor Tia Waris, I spoke to a stakeholder just before we came on, and one thing he mentioned is that when we talk about security, we need to realize we have an opportunity in the sense that these threats are rising at a time when Kenya has just passed the Data Protection Act of 2019. Do you view it as such, as an opportunity which we can leverage as a country?
So the Data Protection Act is very loaded, but it's very important, because even earlier in our conversation we talked about data, and in my mind I kept thinking, so if you're collecting data from me on my farmers network, then who keeps the data and who does it belong to? And if you keep it, do you then become a repository of data? Because the Data Protection Act allows people to be declared as holders of data and therefore have to be registrable. So then I'm wondering, I mean, is Mastercard supposed to be around registrable because of that? And it occurred to me, and I thought, but this is going to get more complicated rather than less complicated, which is why I like what Ridha was saying, is we need to look towards simplicity. And I think that we constantly, in my opinion, seem to miss the mark. Like, if we're going to do capacity building and we partner up with the banks, which is great, you're going to meet the people who have bank accounts. But if you want to build more MSMEs in the country, then you have to look for the informal sector. They don't have bank accounts. So I kind of feel like we keep missing the point every time. We're going to the ones that are already on the basket, already partially regulated, and we're getting them better regulated, which is great. But what about the ones that are not regulated at all? And this is where the fear factor becomes critical. And the issues around data become critical. And if I mean, just to remind us, even when we were doing vaccination rollout in the country, there was huge fear in the informal sector. And a lot of people in the informal sector were actually saying that COVID was fake. So if we don't reach the informal sector and get them to understand that is the most important space we have to get into, then we're going to miss the entire space of our economy, which is 90% of it. So yeah, great, data protection, great. And I think the second problem about it is if we continue to focus on those already partially in the system in order to build them better, which is a great thing, mark my words, I think we're going to not build in a system that will even allow the capacity to bring in the entire country on board. And I think that that's the bit that I'm really worried about. And that is when the security issues are going to start hitting us, because our system is not going to be robust enough to take on 100% of the country. It's only going to take on that 10, 20% that are already partially 1 foot over the fence, as it were. Thank you, Julian.
Thank you, Professor. Let me cross over to Mr. Ali, and I'm sure there's a lot of work you're doing as far as security is concerned when it comes to digital payments, because this is a concern which keeps on coming up. Every so often you're having a conversation around this area.
Yes, so to just put Professor Varis's mind at ease, Mastercard does not capture or keep any of the client's data or the customer's data, regardless of whether it's Mastercard's Farmers Network or for your average credit card transaction that's taking place. So Mastercard's philosophy and work is based on connecting or providing the rails and the networks for the issuing banks and the acquiring banks to then transfer the data or manage the data between themselves under the regulation and under the policy framework that has been provided to them. So that's just one. And then we're also working towards, and data is a very key theme, and it's very interesting that the concerns around data, which are absolutely valid, need to be addressed with due care. We're working on a distributive data management tool or a program in Australia, whereby why should we, for example, if somebody has to deliver alcohol to their home, let's say, somebody will come, the driver is going to come, is going to ask for the driving license, or check the age of the person, and that has all the data that you need perhaps to open an account somewhere else, right? So how do you actually just look for the data that is needed for you to complete that transaction and ensure that it's either tokenized or encrypted? And I think that's the experiment we're doing, and we are seeing very promising results on it. And I think that's the beauty about Mastercard. We operate in 200+ countries, and therefore we can bring those technologies in. But more specifically to East Africa, Mastercard has recently rolled out its patented tokenization technology. So tokenization does exactly to what has been discussed earlier. It takes the consumer data and replaces the data with digital tokens. And this is only known between the issuing bank and the acquiring bank. It's a handshake, and it's encrypted. So this gives a peace of mind and security for consumers and merchants alike. Now, something additional to that, we also have acquired another cybersecurity product called New Data. It's not NEW, it's NU Data Security. Now, this product is quite amazing because it looks for device intelligence. It's got 4 layers of securitization. It looks for device intelligence, it looks for behavioral analytics, it looks for passive biometrics, and so there are multiple angles with which you can look to securitize data. However, I think coming back to the bigger picture, we must balance the between having too much security or too much inconvenience for the client versus having a smooth experience. And I think that's always the give and take. But we must ensure that people's data is kept safe and secure, and safe from not just fraud but from misuse and abuse, which we are seeing. Online commerce has gone up 400% since the advent of COVID. So cybersecurity is a mainstream agenda with governments, with regulators, with public and private sector. And I think Mastercard is pulling out the assets that would actually help solve for those problems. Thank you.
Thank you so much, Mr. Ali, for the clarification and also the nuggets you've given us around security. Dr. Habil, I'm sure the Kenya bankers are also facing this question of security every other day.
Yes, indeed, it's a very live concern in the banking sector because, as you know, the movement from essentially transacting in the banking halls onto the digital platforms and into the digital space, and especially leveraging on the internet. I think internet being an open environment, makes the banks fairly vulnerable. So with the escalating level of attack, banks have invested heavily in security systems to ensure that that threat is averted. But however, we also see that given that the customers are now also transacting on the digital platforms, they therefore become a point of vulnerability as well. So we therefore are seeing quite a bit of attacks on the customers, things like, for example, phishing emails, things like social engineering scams, things like malware, where they are designed to capture the user's passwords and login credentials and the like. So we are seeing that beginning to increase, and therefore customers becoming extremely vulnerable. Now, our response to that has been more or less trying to up our awareness campaigns. There is an awareness campaign that we have been doing for quite some bit of time. Initially, it was targeting, for example, transacting over the ATM platforms. But now, with the digital platforms taking the center stage, we have moved what we call the Car Chonjo awareness campaign, trying to focus more on the vulnerabilities over the internet. So this is something that we will continue doing. We do it every May. Like right now, we are in the middle of the Car Chonjo campaign, which viewers must have been seeing quite a bit of information being put across on the social media platforms, in the print and TV. So I think to crown that point, we would say that awareness creation is critical on the part of the consumer to be made aware of the vulnerabilities and therefore areas that the consumer need to be alert to.
Thank you so much, Dr. Habil Olaka, and that point takes us to another short break. When we come back, we shall be getting to the tail end of this conversation and picking a lot of feedback online to throw the questions to the panelists and get their response. Stay tuned.